Hello everyone, today I'm going to start the chapter Corporate Governance in Banking. So, this is totally a theoretical chapter, but I have to remember a lot of stuff. So, I will be reading it by highlighting. Uh, Start. Okay, so first we will learn the clauses in the Banking Regulation Act of 1949. First is Clause 10A. It says that minimum 51% of directors. Okay, minimum 51% of directors should have special knowledge in respective fields, and minimum two directors should have knowledge in rural and agricultural economy. Directors can have maximum 10 lakh on 10% paid up capital of the company and can have maximum tenure of 8 years. Now, clause 10B. This tells us company must have a whole-time chairman, or else for a part-time chairman, RBI's approval is required. Now, clause 10BB. If position of chairman is vacant, RBI can appoint it. Clause 10C. Chairman and certain directors cannot hold certification shares. Clause 10D. Any appointment or removal of director should not be entitled to claim any compensation for loss or termination of office. Clause 16. Uh, cannot have any director who is board member of another company have any director who is board member of any director, and three directors should not hold more than 20% of the voting rights. Clause 36A. RBI can remove chairman, chief executive officer, or any person in the banking company. Clause 36AC. RBI can appoint additional director. Clause 36AC. Provision 36AA and AB overrides any other provision of the law. Company now, this was all about Banking Regulation Act. Now, uh, clause. Okay, I think there is some in Companies Act 2013, clause 49 of SEBI. Ganguly recommendation committee recommendations were given in 2002. This told us about the responsibilities of the board of directors. The second recommendation was the no the regarding the responsibilities of the board of directors. The responsibilities are overseeing and managing risk profile, maintaining the integrity of business control mechanisms, and maximizing the interest of stakeholders. Next is there should be proper training and facilities for board of directors, training facilities. Third will be establishment of recommended committees. First is shareholder redressal committee, risk management committee, supervisory committee, nomination committee, and compensation committee. These committees should be formed. This was the recommendation of Ganguly Committee in the year 2002. After that, a PJ Nayak committee told on banking reforms, and it was to review the governance of board of banks in India set up by RBI in 2014. The recommendation was repealing the Banking Nationalization Act, SBI Act, and SBI Subsidiaries Act because this requires government to hold above 50% share in the banks. So this repelled it, like they recommended repealing this act. Also, government should set up banking investment company. Now, what is this? Like all the shares of a specific bank will be transferred to the banking investment company, and it will become the parent holding company of all these banks. Next, until is formed, temporary BVB should be formed, and once BIC is formed, BVB should be dissolved. BVB was formed in 28 Feb 2016 in RBI Central Office of Mumbai. Now let us look into. Oh, okay. Okay, I was wrong. Basically, the laws addressing the governance of aspects of banks, there are three kind of laws. First are corporate governance clauses in the Banking Regulation Act. Second is Companies Act 2013, and third is Clause 49C. After that, these two committee recommendations need to be studied. Now, let us look into corporate governance by RBI. For this, fit and proper criteria for selection of board of directors for public private banks is there, then similar for public banks, and third will be appointment of directors and constitution of committee on the board. Okay. Now, corporate governance by RBI. Fit and fit and proper criteria for board of directors of private banks. Okay. Now, next is same for public banks. Now, first is they should be a graduate and between 35 to 65 years of age, should not be an MP or MLA. Second is formation of nomination committee, which should be determined fit and proper criteria for directors. Now, nomination committee, like who will basically determine the criteria, there should be three independent and non-executive directors. Next, for public banks, they should be graduate. Age should be 35 to 67 years of age. For private bank, it is 65 years. They can hold office from 3 years, and also re-election and is there, and maximum 6 years should be there for holding of office. And board of members should not be a member of any other bank or financial institution, neither a past member of any bank, and it's not, and they should also not be involved in any kind of para banking activities or stockbroking, and neither they can be MLA or MP. This is all. Now, next is for appointment of directors and constitution of committee of the boards. For this, uh, first is these are applicable to all the private sector banks, including small finance banks and wholly owned subsidiaries of foreign banks. Okay, these are applicable. Next is the State Bank of India and nationalized banks. These are not directly applicable, but like these are applicable if only they are also consistent with the uh, specific provisions of these banks. If they are not consistent with them, then these are not applicable. Third is this circular is not applicable in case of any foreign banks operating in India, having branches in India. And for local area bank, payment banks, and regional and rural bank, it will be notified separately whether they are applicable or not. Now, for the chair of board should be an independent director. And also, in the absence of the chair of the board, the meeting of the board shall be chaired by an independent director only. The quorum for the board meeting shall be, like for each board meeting, quorum will be at least one third of the total strength of the board of directors should be present, or three directors, whichever is higher. At least half of the directors attending the meeting of the board shall be independent. Okay, now let us look into individual committees. First is audit committee board. Now, audit committee board, it shall be only constituted with only non-executive directors. They are NEDs. Now, the chair of the board shall not be a member of the audit committee board. Mm, Also, the chair of the audit committee board shall not be a member of any other committee of the board which has a mandate of sanctioning credit exposures. Now, the ECB shall meet with a quorum of three members and at least two-third of the members attending the meeting of the ECB shall be independent directors. Meetings of ECB shall be chaired by an independent director only, who shall not chair any other committee of the board. ECB should meet at least once in a quarter, and all the members should have the ability to understand all the financial statements, notes, reports, and everything attached to it. And also, member should definitely have a requisite professional expertise or qualification in financial accounting or financial management. Now, next is Risk Management Committee of the Board, RMCB. So, what is this? This should have a majority of non-independent, non-executive directors. They should meet with a quorum of at least three members, and at least half of the members attending the meeting of RNCB should be independent directors. And out of this half, at least one member should have a professional expertise in risk management. Now, meetings of RMCB, they shall be chaired by an independent director only, and they shall not chair the board or any other committee of the board. And also, the chair of the board may be a member of RMCB if only he has the requisite risk management expertise, and they should meet at least once in a quarter. Next is Nomination and Remun- Remuneration Committee. Uh, this committee is made up of only non-executive directors as well. The chair should not chair the NRC. Like the chair of board should not chair the NRC. Next is they should meet with a quorum of minimum three members, and at least half of should be independent directors. And out of this, one should be member of risk management committee. Now, meetings should be chaired by an independent director. This is normal, and the meeting may be held as of when it is required, and there is no specific time for it. Now, next is the age of tenure for non-executive directors. First is upper age limit is including the chair of the board shall be 75%, and after attaining the age of 75 no one can continue with these positions, and total tenure cannot exist shall not exceed 8 years, and after completing 8 years the board of a bank may be considered for uh, reappointment only after there is a minimum gap of 3 years. Now, remuneration of the non-executive directors, there should be uh, they should be of two costs. Like first is be fixed remuneration, and second will be sitting fee. Sitting fee will be for attending a meeting, and fixed will be in line with the responsibility. And like however, such fixed remuneration for NAD other than the chair of the board shall not exceed 30 lakh per annum. Okay, so maximum can be 30 lakh per annum. Next will be age and tenure of MD and CEO of whole time directors. That this okay. No person can beyond the age of 70. This is the maximum limit in private sector banks, and it cannot be held in the same time for more than 15 years. And after completing 50 years, the same person can be reappointed with a minimum gap of 3 years. Provided that during those 3 years, they were not associated with any other bank or it's not any other bank or associated with this bank only in any other way or any group entities directly or indirectly. Also, they MD or CEO or WTD who is a promoter or major shareholder cannot hold this post for more than 12 years. Now, however, in extraordinary circumstances, it is the sole discretion of the Reserve Bank, such that they may be allowed to continue up to 15 years. This examining the matter of reappointment within the 12 to 15 year, okay, that is all. Now, what is the guideline of RBI for ownership in private banks? This is just the amount of percentage which is allowed for ownership in private banks. First is the category of shareholder for promoter group 15% or higher as per the licensing agreement. For new private banks, uh, it is that the promoters should have a minimum 40% shareholding. This is a requirement, and for others 15% minimum and more than that. Now, next, for all the shareholders in long run, natural person could have maximum 10%. Now, legal person, non-financial institutions could have 10%, and financial institutions which are not owned by 50% or more by one individual. In this, two categories are there: non-regulated and non-diversified could have 15%, and regulated and diversified or PSUs could have 40%. Now, financial institutions which are not owned by 50% or more by, which are owned 50% or more by single individual, they are counted within the non-financial institution category. Okay, no, I think they are counted in the category of a natural person. Yeah, they are counted in the category of natural person. Okay, now, and their shareholders obviously 10%. Next is shareholders. Shareholders permitted 10% or more in the bank will be subject to minimum. No. Like shareholders permitted 10% or more in a bank will be subjected to minimum holding period of 5 years. Okay? Now, also, RBI has constituted an internal working group to review the extent guidelines on ownership or on corporate structure for Indian private sector bank under the chairmanship of Dr. Prasanna Kumar Mohanty. Also, the one of the key recommendation of this were the cap on promoters group should be increased to 26% from 15% of the paid up voting equity. Okay, so that is all. 26% till 26% it should be increased. Now, for RBI's guidelines for owners in private banks issued in 2016, these are okay. Only this much is left. These are any acquisition of shareholding voting rights of 5% or more of the paid-up capital of bank or total voting rights of the bank shall be subject to obtaining prior approval of RBI. Meaning, like for any acquisition of shareholding or voting rights, like any acquisition of shareholding for more than 5% or more of the paid-up capital, they require the approval of RBI. You know, these were the guidelines for owners in private banks. These were issued in 2016. Okay, now acquisition of shareholding in private sector bank shall be subject to extent foreign direct investment policy. As of now, foreign investment in private sector banks from all sources shall not exceed. Okay, so foreign investment in private sector banks from all sources shall not exceed 74% of paid up capital bank. Okay? And FDI in private sector banks is 20%. Now, cross-holding limits. What is the cross-holding limits? That bank shall not acquire any fresh stake in bank's equity shares if by such acquisition the investment bank's holding is 10% or more than the investee bank's equity share. Okay. Now, next is higher shareholding limits. RBI may permit higher shareholding that are permitted where, in the opinion of RBI, a change in ownership or management in the bank is required and interest of deposits and in public interest. However, such shareholding should be brought back to normal levels within 12 years. And from the date of such shareholding, that is all. A proposed amendment to the ownership in private banks are RBI constituted an internal working. Okay, I think yeah, this was done already. Now, what were the basic principles of Basel Committee of 1974? First is that board has the overall responsibility for the whole bank. Now, board members should remain qualified individually and collectively for their position. Now, board should define appropriate governance structure and practices for its own work. Under the oversight of the board, senior management should carry out bank activities. Now is in a group structured board of a parent company has overall responsibility of the group. Also, banks should have an effective independent risk management function, and risk should be identified, monitored, and controlled. Robust communication within the bank about risk should be there. Internal audit function should provide independent assurance to the board, and governance of banks should be adequately transparent to shareholders, depositors, and other relevant stakeholders and market participants. So that is all. So what did we study? Let's just revise once. There were the laws addressing the governance aspects of banks. There are three laws. First is the Banking Regulation Act. In this, we studied, I think, yeah, nine clause, and the second will be Companies Act 2013. Third is clause 49 of SEBI. Then we studied the recommendation of Ganguly Committee. Then we studied recommendation of PJNAG Committee. Then we studied the corporate governance in banks. For this, what are the applicability in which banks these are applicable? Then we studied about the chair or the quorum of the meeting of the boards or the committee on the board. Now, what were the committees? First were the audit committee of the board. Second is risk management committee. Third is nomination and remuneration committee. That is all. These were the three committees. Yeah. Now we learned about the age and tenure for non-executive director, remuneration of non-executive director, and age and tenure of MD and CEO of the banks. Now also regarding the guidelines of ownership of in private banks, how much equity shares are available for which group of people. Next is also for private bank owner, RBI issued some extra guidelines in 2016. These were the guidelines. And lastly, we also read about the Basel Committee 1974. We read about its principles. That is all.